Hey, what's going on, guys? Welcome back to Justin Lowe Stocks. I know it's been a very long time, but you know the drill. Have trouble getting up in the mornings, and sometimes I'm more tired than others, and you need your rest when you're feeling down and tired. So I've just had to focus on some rest a bit more, and then yeah, once I feel rested, you trade better as well. So I traded Thursday. I did have an RDO on Friday from work, which helped being able to stay up late. And basically, I saw this stock. It's been on a 3-day ramp from the 4th of September, 5th, and then the 6th was its first red day, where it did ramp up in the morning, but then failed in the afternoon. And as you can see, it failed right at the same point where it failed back in June and July. It had failed around that 250 area twice. So that's obviously going to be a very strong resistance point, just looking at the past price action. So that's the daily chart you're looking at. I'll take it to the minute candles so you know exactly where I entered the trade and why. So this wasn't Friday, this was Thursday, I'll add. So as you can see, pre-market, it was having very bullish price action, which bullish is on the uptrend. So pre-market started, it was around $2 a share, and it's ended up working its way. Not the cleanest sort of chart, but it did work its way up to around that 250 area, which I was just talking about is a strong resistance point. And it was hovering around that point as the market opened, and then as soon as the market opened, it started selling off. Now, this is a straight technical analysis. This technically should be a very strong support point, because well, not very strong, but it should be a support point, because that was a very clear top that it had in pre-market. It did break it over here, however, but it was a very clear top, and that should therefore act as a support point where the price comes down. It should theoretically bounce off if it's strong and head back up, and if it's weak, crack below that level and continue down. Well, once I saw it crack this level, and it didn't just crack it by a little bit, as you can see, it's a massive red candle that came all the way down to 230. I started entering a short position there, which, as you know by now, surely, entering short means you want the stock to come down, if you've been paying attention to all my other videos. So I started entering the stock at 237, $2.30, and 235. Like I kept adding into my position because it was a weak stock. Pretty sure I took my first positions in this red candle, added in this second red candle, and then as it bounced up, I added again, because like I say, if it has a big downward move, it tends to have a bounce back up. And if it has a big upwards move, it tends to have a pullback. It always happens. Very rarely see a stock just go boom, 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 like straight away with no little dip back up. Or if it's shooting up, and it never has a dip back down and go back up. You know, it always has a little bit of a pullback, whichever direction it's going. So in that pullback, I was like, yep, I'm expecting this. I'm expecting it to have a little bit of pullback, and I'll enter a bigger short position there. And I did, and then basically I was looking at this support point. So it had topped here and it had bottomed here. So I thought that will be a possible turning point, and I think I got out at the very bottom of this red candle, and then it spiked up a little bit again. Pretty sure I re-entered short, and then just took another little scalp from that 228 down to 220. So yeah, it was a great trade. First trade in about 2-3 weeks. It was a great trade, making 7%, which is for me a very good return. So it's also important to look at your percentage returns, because obviously someone with a $50,000 account can make a 1% return and make more money than someone with a $5,000 account who makes a 1% return. So you're looking at, you want to look at your percentage gains, because that determines how much you'll make no matter how much money you have, if you know what I mean. So obviously someone with a larger account is going to be able to make more money than someone with a smaller account. So the only way to equal how you're going compared to every other trader who might have $1 million accounts is to look at the percentage gains you're having. That's your best way to track how good your trades are, by how big a percentage gains or how big a percentage losses you're having. So for me personally, that's a pretty decent percentage gain. 7% in, I think it took me 5 minutes, something like that. So that was the only stock I traded on Thursday, However, I did note this other stock to have a look at because it was looking interesting, ARWR. So this is the other stock that was gapping up on the Thursday. I might show you this. I'll show you the daily first. So we've got the daily candles, as you can see, and it's a good chart. It's a very strong uptrend. It's been uptrending basically since May, I'd say. It's been on a slow, steady grind of an uptrend, and then it had this absolute massive day. As you can see, it went from 14 to $22. One day, over 25 million shares traded in the day, compared to its average, I'd say, is around 3 million. So it's had heaps more volume and had good price action. The main thing I was looking at was it was having a basic breakout pattern, but the breakouts haven't been working in the market lately. Although I haven't been trading, I have still been keeping an eye on the markets and how bullish they are or bearish, and they haven't really been moving that great over the past 3-4 weeks. It's been fairly slow. But yeah, so I did notice, however, this breakout pattern. I didn't trade it, like I said. I didn't want to risk having a loss, and I wanted to see how well these patterns are still working. So as you saw with the dailies, it was already spiking up big pre-market, and as you can see, it was a strong uptrend during pre-market. The stock opened up here. It made a bit of a run, and then it pulled back, but it pulled back to this white VWAP line, which is, as long as it holds that line, it's still considered a bullish trend. And then you simply mark the highest that has been on the day so far, which was at this point here, the 1930 area, these two candles, and then you just mark that line, and then if it breaks that 1930 later on in the day with volume, it's technically a buy signal. So I drew an arrow where I would have bought, and I drew the line where the breakout would occur, and it did break out, and I was basically just use this as something to see if it still works. So I think it's a good idea when you're trading. If you don't want to risk your capital, you might as well start looking at other patterns that do occur, and even just mark them out on the chart as you see them occurring, and then you go to bed and the trading day plays itself out, and then you wake up the next day and you take a look back at the trade you were thinking about taking and see whether or not it would have worked. In this case, it would have worked well. It would have, if I bought there, realistically I would have held all the way to here, but I would have sold into this pop up to here. I don't think it's that big of a percentage gain. Oh no, it is 5-6%. That's a good return as well, in a matter of what, 7-8 minutes. So that would have worked out well. And yeah, that's how I've basically learned. People always ask how I've learned. There's no book that'll tell you here's when to buy, here's when to sell, here's when to do this, here's when to do that. You basically just need to look at the charts, look at things that other people have done and what works for them, and then you got to basically try it out for yourself. And I think this is a way you can learn what patterns do and don't work without having to risk anything. You just mark it out and you check it the next day when you come back, and the trading day has already played itself out. So yeah, I've finally came back to trading on Thursday. I say it every time, I hope I trade more consistently in the future, but like I said, I've been fairly busy with work, and I've just been feeling tired and a bit drained lately, so I've taken a bit of time off, and I think it's rejuvenated me a bit. I was feeling, when I was making these trades, I wasn't as rushed and aggressive. I was more laid back, because normally I would have taken that trade. In this case, it would have worked out, but if it didn't work out and it failed, and it came back down to here, I would have taken a loss again. And I think it's important to remain relaxed and patient as you're trading. And I feel like after I've had that little bit of a break and I come back into it, I feel a lot more relaxed and I'm not putting as much pressure on myself to make big gains, because I think I only made $110. Not as much as I was making in the past, but in saying that, I haven't put more money into my account since my last big loss, and I think it's good that I've done that, because I need to focus on my actual strategies and my stopping out of losing positions. And the best way to do that is with a small account, because you obviously limit how much you can lose. So yeah, I think it's been good to have a bit of a rejuvenation. And yeah, we traded Friday. I'll do that video in just after this one. And yeah, hope you have all been good. Sorry I've been away for a long time. My Instagram and all my socials have been a little bit quiet, but you can follow me on Instagram at JLOWE4, and I've also got my Facebook page at Justin Lowe Stocks, so go check that out if you want as well. And yeah, I'll be looking to get back into this more consistently. Thanks very much for watching, and I'll talk to you guys later. See ya.